Hello, hello. Welcome. Good morning. All right. Hi, all. My name is Blaze, and I'm the payroll leader here at Intuit QuickBooks. And I'm coming to you live from QuickBooks Connect in Las Vegas, Nevada. The QuickBooks Payroll Compliance team is here to let you know that we have your back. We want to make sure that you feel confident in running your payroll through QuickBooks and that you have trust in our brand. As a part of that, we are providing content such as email alerts and in-product messaging with what's going on in the payroll space. And now we're even holding this joint event with the Colorado Department of Labor and Employment. At the end of the session, a survey will pop up and I'll kindly ask you to please fill it out so that we know how we're doing and what we could do more to make things better for you, as well as if you like events like this one. For today's session, Colorado will first talk about the new program, followed by QuickBooks talking about how that program will be supported in QuickBooks Online Payroll and QuickBooks Desktop Payroll, and then we'll have an open Q&A session. Please enter all your questions in the Q&A box throughout the day today. The session will be recorded and will be shared afterwards. Keep an eye on the chat for all important documents and URLs that we'll be sharing out. All right, now let's get started. I'll pass it off to Jessica, the Communications Manager for the Family Division of Colorado Department of Labor and Employment.
Thank you, Blaze, and thank you everyone for joining us today. We've got quite a few people from the Family Division on the call today, and we have a short presentation to go over with you. So I'm going to go ahead and share my screen before I hand it off to my colleagues. And then once we get through our presentation, we'll hand it back over to Intuit, and then we'll answer your questions. So with that, I am going to hand it over to my Case Management Branch Manager, Joshua Mears. Josh?
Good morning, everybody. Thank you all for joining us today. I want to congratulate us all on making it through the week. So first victory right there. As Jessica mentioned, I am the Case Management Branch Manager, so I'll be overseeing our Claims Management Division when we start going live with all of the claims in 2024. So we're going to go over a few things here to educate you all on our family program. We'll go over a few agenda items. Today, we're going to be covering what is family, a little timeline of our program and key dates to keep in mind, when employees can use the family benefits, funding for the program, calculating premiums, coordination of benefits, private plans, employer resources, and then at the end, we'll have time to hopefully address most of your questions. So with that, we will go on to what is family. I'm going to give you a quick little overbrief here of the program. So family will provide paid leave for Colorado workers to take care of themselves and their loved ones during certain life events, which we'll get into in a moment. The program will cover almost all workers in Colorado, including those who are self-employed. The family program is a social insurance program with both employers and the employees contributing to the fund that will eventually pay out benefits. The premiums are set to 0.9% of the employee's wage, with 0.45% paid by the employer and the other 0.45% paid by the employee. The family premium rate is fixed at 0.9% through 2024. For 2025 and beyond, the director of the family division sets the premium rate according to a formula based on monetary value of fund each year. Family premiums should not go over 1.2% per statute. It's been demonstrated in several states that premiums have decreased and benefits have been able to increase over time. Okay, we're going to take a look at when benefits become available starting in 2024. Family will provide 12 weeks of paid leave for Colorado workers to take care of themselves and their loved ones. Those who experience birth complications may be eligible for an additional 4 weeks for a total of 16 weeks. Covered workers will be able to apply for family leave benefits during certain life events, such as managing a serious health condition for themselves or caring for a family member who has a serious health condition, caring for a newborn child, including adoption and foster care, making arrangements ahead of a military deployment, or to deal with immediate needs and impacts arising from domestic partner violence or sexual assault. The program will cover almost all workers in Colorado, including those who are self-employed. Okay, we're going to take a quick look here. It's the implementation timeline. we are excited to share with you all that the Family Plus Employer Portal is now available to all employees at family.colorado.gov. We have how-to videos and step-by-step instructions on the My Family Plus Employer page of our website. Starting in January 1 of 2023, you'll need to have your payroll systems up to start deducting premiums from employees and subsequently remitting those payments along with wage data within My Family Plus Employer. Every employer will need to register with the My Family Plus Employer in the first quarter of next year before the first premium payment is due on April 30th. We will be offering a 30-day grace period for the first payment before it's considered late, as we want to give employers plenty of time to get comfortable using our system. Finally, beginning on January 1st of 2024, family benefits will become available to covered workers. As mentioned earlier, Family is a voter-approved initiative that will be funded by both employers and employees. Employers with 9 or fewer employees are not required to pay the employer share of the premium and will only have to deduct and remit the 0.45% employee premium for their workers on a quarterly basis. Employers with 10 or more employees, however, will share the cost by matching the 0.45% premium. Employers can also choose to cover the employee's premium as an added perk. Self-employed individuals may also voluntarily participate in the program and would pay the 0.45% employee premiums. Okay, now I've gone over a little bit of the basic stuff. I'm going to hand it over to my colleague, Evan, who's in our policy unit, and he'll go over some more fun details for you. Evan, it's yours, sir.
Sounds good. Thanks, Josh. My name is Evan. I'm the manager of the policy unit within the family division. And over these next few slides, I will take you all into the weeds a little bit with some of the more detailed aspects of the program. So first, regarding definition of wages under the family program, the family definition of included and excluded wages mirrors Colorado's unemployment definition of included and excluded wages. We have a summary of these wages on the employer page of our website. Basically, employers who are exempt from paying unemployment premiums, though, are not necessarily exempt from paying family premiums. These employers should refer to the list on our website to determine what counts as wages. We do want to make the administration of family as easy and as painless as possible for our employers. Also to note, premiums are paid on wages up to the federal Social Security wage cap. Since that number is not set in stone, as that fluctuates from year to year, so will the family premiums wage cap. And then, as I mentioned before, but I think Michelle may drop a link into the chat, a link for what is and isn't considered wages under the family program. So next, when it comes to counting how many employees you have, your employee headcount will be calculated once a year by counting the number of employees who were employed during 20 or more calendar work weeks in the preceding calendar year. So in 2023, employers that report having 10 or more employees who were employed during 20 or more weeks in all of 2022 will be required to pay both the employee and the employer share of the premium for all 4 quarters in 2023. And as Josh mentioned, they can deduct the employee share from the employee's wages if they choose to. Quick note about whether or not an employee is employed during a given week. Obviously, if they work some during that week, they're employed, but also if they're on paid or unpaid leave, whether that's sick leave, medical leave, leaves of absence, disciplinary suspensions, anything, as long as the employer reasonably expects them to return to employment after that leave, then they are considered employed throughout that leave. So next is a slide that sort of visualizes this 20 calendar week concept. We have a few examples here. Our first two are seasonal workers who both work during 20 or more weeks throughout the calendar year. As you can see, worker one here meets the 20-week threshold, even though those weeks were not consecutive. And worker two meets the 20-week threshold, even though he sometimes works only a day or two in a given week. This third worker here is a full-time employee who is employed for more than 20 weeks, and this worker would still be included in the total head count, even though he left employment before the end of the year. And then this final worker in the red box, let's say he was hired to replace the third worker. This employee would not count toward the total head count because he was only employed during 19 weeks in the year. However, if the third worker on the screen had left employment a week earlier, and the fourth worker, the replacement, had started a week earlier, then both of them would count toward the total head count because both would have been employed during 20 or more work weeks that year. So another question we're often asked is how to count remote employees. So as you can see on this graphic, if the employer has 10 or more employees nationwide, even if they work outside of Colorado, the employer will still be responsible for remitting both the employer and the employee share of the premiums to the family division for its 3 employees who do work in Colorado. Now, the same concept applies to national employers who have employees all over the country. As you can see on this map, this employer has 15 nationwide employees. Therefore, because it has 10 or more nationwide employees, it will be responsible for remitting both the employee and the employer shares of the premium to the family division for its 8 Colorado employees. Now let's talk about what family will look like for employees once it's up and running in 2024. Here you can see a few ranges of what premium deductions and benefit payments will look like based on an employee's wages. When taking eligible family leave, employees will receive up to 90% of their wages based on a sliding scale. Now, benefits are capped at $1,100 per week, and the benefits calculation is proportional to the average weekly wage for Coloradans and therefore may increase and decrease over time. We do have a benefit amount calculator on our website that'll help families get a rough estimate of both their deductions and their eventual benefits payments. And then again, just as a quick reminder, the premiums are only paid on wages up to that Social Security wage cap. So next, I want to talk briefly about some of the ways that family benefits interact with short-term and long-term disability policies, the FMLA, and workers' compensation. So first, regarding the FMLA, while Colorado's family program is designed to run concurrently with the FMLA, the family division doesn't manage or adjudicate FMLA claims. When a worker applies for FMLA, that employer must tell the employee that they may be eligible for paid leave under the family program and deliver to that employee the program notice that's available on the employer page of our website. But ultimately, for questions related to the FMLA, please visit the U.S. Department of Labor's website for guidance, which is linked here in the slide deck, and I believe Michelle or someone will drop that into the chat as well. Now, regarding short and long-term disability, if the reason for family leave also qualifies for short-term or long-term disability benefits offered by the employer may count both the wage replacement amount and the duration of family leave toward the limits included in the short-term or long-term disability policies, so long as it first gives written notice to employees that it intends to do so. And then regarding the interaction between family and workers' compensation, family benefits may not be taken with workers' comp benefits for the same reason for the same absence. If someone is absent from work because of a work-related injury or illness, they cannot simultaneously claim family benefits for that same condition. However, if they are still working after the injury or illness and need to take leave for an unrelated issue, family benefits may be used. Any condition compensable, though, under the workers' comp umbrella is not eligible for family benefits. Applicants and healthcare providers must disclose this information on the worker's family application, and if they do not, then benefits paid to them may be considered an overpayment, and they may be disqualified from receiving family benefits in the future. Next, briefly, before we dive more into private plans, we do want to emphasize that nearly every Colorado employer will be required to provide a robust paid family medical leave program, whether they do that through participation in the state plan or through an approved private plan. The only employers who aren't required to provide an equal or greater paid leave program are federal employers with employees in Colorado, some railroad employers, and local government employers who vote to opt out of the program. So first, broadly regarding private plans, private employers will have the option to get their private plan approved by proving to the family division that their private plan will be in place by January 1st, 2024, and will provide equal or greater benefits than the family plan. Self-insured plans are a subset of private plans and will need to follow all the same rules and provisions set forth by the family division and get approved by the division just like other private plans. The biggest difference here, though, is that employers with a self-funded, self-insured private plan do have to submit a surety bond to the division in order for the division to vet the financial standing of that company. And then finally, as I mentioned, local government employers are the only employers who can truly opt out of the family program and not be required to provide an equal or greater private plan. So now a little bit more detail about private plans. Again, in order to qualify for an approved private plan, employers must offer a plan to all employees that provides all of the same rights, protections, and benefits as Colorado's Family Paid Leave Program. So for example, in order to be approved, a plan must offer at least the same number of weeks of benefits, offer at least the same level of wage replacement for each week of those benefits, include no additional requirements or conditions, deduct no more from employees' paychecks as the employer would be allowed to deduct under the state plan, cover all employees through the duration of their employment, and of course, remain compliant with any additional requirements established by the family division. Now, we understand employers need time to shop around and consider their private plan options, and that can't happen until the private plan marketplace opens up now that we've adopted our private plan rules. Therefore, all Colorado employers will begin paying premiums in 2023, and those who secure an approved private plan effective on or before January 1st, 2024 will be issued a refund of paid 2023 premiums minus a private plan administration fee within 90 days of approval of that application. We anticipate opening up the private plan marketplace sometime between quarters 1 and 3 next year, at which time we will provide more guidance on how to apply for private plan approval within the My Family Plus employer portal. The deadline to submit a private plan application and receive a refund for 2023 premium payments is October 31st, 2023. But the biggest takeaway here is that all private sector employers will pay premiums next year. And while they consider their private plan options, if they decide to go with the private plan, they will be able to apply to the division for approval. And if approved, they will be refunded all of their 2023 premiums. And with that, Josh, I will hand it back to you.
Thanks, Evan. Appreciate it. Okay, everybody, now we're going to go over what needs to be communicated with all the employees. So now is the time to start preparing your employees for that payroll deduction, or those payroll deductions that will be starting in January of 2023. We have many tools available in our employer toolkit to help you do that. First, there's a required program notice that employers have to post by January 1st of 2023. This outlines all the legal requirements and protections of the program. We have a secondary break room poster that summarizes all of this nicely. This program notice is required by law to be posted in common areas. Second, we have recently added a payroll stuffer that employers can distribute to employees with their regular pay stubs. This can be distributed in any way that works for your operations, whether that's digitally, via newsletter, printed off, or stuffed in those envelopes. These are available to download at our website at family.colorado.gov. I'm going to wrap things up by pointing you to some of our awesome tools that we have online. So please go to our website. In addition to the break room poster that was mentioned, we have an HR fact sheet. We have local government fact sheets. We have a sample pay stub on the toolkit, and we are also planning to add more information and resources as the family program progresses. You can also estimate premiums and benefits using our online calculator. We also now have to complete a local government guide along with a poster and a sample written employee notification for local governments on our website as well. And if you look or work with a third-party administrator, you want to be sure that your TPAs are set up for success. So we have a page dedicated to TPAs as well with specific file specifications and sample files on how to upload clients and employers. All right, we do want to hear from you all, so we highly encourage you to reach out and engage with us in a variety of ways. Our email address is here on the site, so you can go to thefamily.colorado.gov. You can email us with the email address on there. You can follow us on all the big social media outlets, Facebook, Twitter, Instagram, and LinkedIn. And we also would like you and encourage you to subscribe to our family newsletter. By going to the website, you can sign up for that and get all of our latest updates sent right to your inbox so you don't have to come looking for it. So please make sure you go to our website, check out all these wonderful tools that we have for you all. And that wraps it up. So we'd like to just thank you all for taking the time to be with us today. And before we open it up for questions, we're going to hand it back over to Wendy and the Intuit team. So thank you all very much.
Great. Thank you. Blaze, are you going to do an introduction for Intuit, or is it me? I think it's me today. Thanks so much. We appreciate this time with our Colorado colleagues and appreciate their time in letting us present our product opportunities here. So let's get started. My name is Wendy Moore, and I'm a Senior Compliance Program Manager with Intuit, and along with my colleague, Michelle McMullen, we'll be presenting our product solutions for Colorado FAMLI. So we'll start with QuickBooks Online. And little blurb about me, but I just want to say before we get started, some of the screenshots that you're going to see today for QuickBooks Online are still in draft form, and we're putting the finishing touches on those, and we'll be getting that solution out to you before the end of December. So watch for the email so you'll know how to go in and get that set up for your company and your employees. So let's get started. There's two things that you'll need to do to get ready for Colorado FAMLI. First, you're going to do the creation of a company level policy, and then you're going to assign that policy to your covered Colorado individuals. So to do that in QuickBooks, you're going to select the gear icon in your upper right corner of your QuickBooks Online Payroll account. And then you're going to select from that menu, Payroll Settings. And then you'll move to Colorado Tax. And the Colorado Tax section, once you've edited and moved into it, is in the gray area that you're seeing on the left of the screenshot here. And then you'll navigate down to the Colorado Paid Family and Medical Leave section and select Start. And once you select Start, then you'll start to configure your policy. And so here you'll be choosing your employee count. So this is the count of employees that is being used to determine your rate responsibility for Colorado FAMLI. You'll enter your Colorado FAMLI agency ID. And once you do that, you'll select define rates. But I did want to notice that even though every employer is going to need to pay premiums, not the employer, but premiums, whether it's the employee or the employer portions, if you have an approved private plan for 2024, you will be able to exempt your policy from collection here for that next period with an approved plan. You'll also see that the effective year right now is showing 2022, but the effective year you will see when you go into product will be for January of 2023. Once you've entered everything on this screen, then you'll select define rates. So here you're going to create your policy. So you're going to name the policy, give it a name. You'll need to note this because this is the name you'll use to assign this policy to your covered Colorado individuals. The policy effective date here will default to January 1st of 2023. And now you'll configure the percentage amounts you and your employees will contribute. So notice in this example, the employer has less than 10 employees, but they're electing to pay 100% of the employee premium. So you can, as an employer, choose to pay the premium on behalf of your employee, but we will enforce the minimum rates based on your covered individual count that you selected in the first section. So once you're done here, you'll select Save, and the next step will be to add this new policy that you've created to your employees. So to do that in QuickBooks, you will select Payroll from your left navigation panel and go to Employees. This is the same screen where you would go to run payroll that brings up your employee list. And then you would select your first employee to add this new policy to. But and you'll see there where the little hand is where it says assign policy, so that's where you would start. But I do want to call attention, there's also an option for you to create or edit a policy from here. So you don't have to start in the company settings where we just discussed. You can go directly to your first employee you want to configure and create your policy from here. However, you'll still have to add this policy to all of your existing employees that will be paying premiums. Just wanted to mention that. So once you select assign policy, then you will, in your tax withholding section under a new area called Colorado Paid Family Leave section, you'll select assign the policy. You'll select the name that you gave it from the drop down and apply that policy and save it. And so what you will see, here is where once you choose the policy from the drop down, you'll see the information about that policy that's being assigned to this employee and the date you're actually assigning it to this individual. And so upon save, if you were to go into your employee profile again, then you'll see this policy set will be visible in their withholding tax area on their employee record. So pretty easy peasy to set up. So you may be wondering who's going to do the remission of the premiums and the filing of the returns on your behalf. So let's review how you can know how that will happen for you as a QuickBooks Online Payroll customer. So in your QuickBooks product, you'll go to the gear icon in the upper right-hand corner again, and you'll choose from the menu there, payroll settings. You're seeing two menus here because if you use QuickBooks with integrated accounting, there's more options on the menu. If you're just using our payroll product, then you're going to see fewer menu options here. But again, you'll choose payroll settings from this menu. You'll then navigate to the area that says taxes and forms and the area that says payment and filing preferences. And you'll see the type of payment and filing preferences you have there. If you were to select the edit pencil there, we'll kind of go in here and we'll talk about the ways in which you can interact with pay and file processes for QuickBooks Online Payroll. So the first example you just saw from the previous slide is this person or this account has automated taxes and forms turned on. So from the edit, you would see that this checkbox for automated taxes and forms is set, the automated taxes and forms is on, and the date in which Intuit took responsibility for doing this for you, meaning you don't have to push any buttons or submit any kind of transactions. This is fully automated. That's the date we took responsibility. And so if this is your setup for QuickBooks, then this is how your premiums and your return will be filed with Colorado FAMLI. There's also two ways in which you can have more of a do-it-yourself option. So if your status says I'll initiate payments and filings using QuickBooks, this means that you're still using QuickBooks to make your payments and filings. You're just you're using our back-end processes, but you're choosing when those transactions get initiated. So you're going in to QuickBooks and you're submitting those payments and you're submitting the filings. That will also happen for Colorado FAMLI when the first filing and payment are due. So if you'll notice when you were to edit in both of these options here, automated taxes and forms is off. It's that checkbox is not marked, and the date at which you have been responsible for doing either pushing the button yourself, or for some customers who choose to do that pay and file process completely outside of QuickBooks. So you're going directly to agency websites and working through their portals to do that payment and filing. You would see, you would have the second radio button selected saying you'll pay and file with those agencies. For customers that have that second radio button selected, you need to go directly to the Colorado Family Portal, register, get your account number, and that's where you will be remitting your premiums and your returns. So with that, I'm going to turn it over to my esteemed colleague, Michelle McMullen, and she's going to talk about our solution for QuickBooks Desktop.
Thank you, Wendy. Good morning, everyone. So I am Michelle McMullen with the Payroll Compliance Operations team. And I will walk you through those same steps Wendy just showed us for QuickBooks Online in QuickBooks Desktop. So starting with setting up your Colorado family tax in QuickBooks Desktop. If you are using QuickBooks Desktop, there are two paths for setting up a new tax. You can go through the Employees menu and select Payroll Setup, or you can go through the Employees menu and choose the Manage Payroll Items and New Payroll Item and set up the tax that way. And we'll show you screenshots for both those paths. So starting with the Payroll Setup path, if you choose to go through Payroll Setup, you will, once you've accessed Payroll Setup, over on the left-hand side, you will navigate to the Taxes menu and then the State Taxes menu. In your list of state taxes, you'll find Colorado, which would already be set up in your QuickBooks. And if you expand that little T arrow you see on the left-hand side of the Colorado state tax title, you'll be able to edit that list and add both the Colorado family for the company and the Colorado family tax for the employee portion. Once you set up that tax, you'll be asked questions about expense accounts and liability accounts. Those things will be pre-populated by Intuit based on your defaults, but you can always use the drop-down menus to change them based on your company preference. The taxability for the item has already been pre-configured by Intuit, so there's nothing to do in selecting the taxability. That's all part of the tax itself. So then in the next, once you click done after you've added the tax, you'll get to the next screen of the state tax setup where you'll see the schedule payments button. When you click the schedule payments button, you'll be shown the menu on the right, which will allow you to set the payee, which again will default. You'll be able to add your Colorado family ID and select the pay frequency, which will default to quarterly. So click done after you've done those things. And then still in that payroll setup menu on the left-hand side, you'll navigate to the employees menu. From the employees menu, you'll select the employees in Colorado that you want to set up for this tax. And then you're going to click next through the screens until you reach the number 4 screen, which is the tax details screen. So once you're on the tax details screen, you can again expand that little arrow on the left-hand side of the Colorado title. And once you expand that menu, you can select subject to Colorado paid family leave. And then this is where you'll enter in the rates for the employee and the company portion. So that takes you through the payroll setup path of adding the company payroll item as well as setting up all of your employees. If you choose to go through the manage payroll items path, so again, you'll go through the employees menu and then manage payroll items, and then add new payroll item. Then you'll select the custom setup and other tax in the payroll item menu. And then here you'll see a drop down where you'll be able to scroll until you see the Colorado Paid Family Medical Leave Company and Colorado Paid Family Medical Leave Employee Tax. So once you add the Colorado family tax, you'll be shown the screen for the company and then employee paid liability, where you can add the agency ID number. And again, select your liability and expense accounts. They'll default, but you can always change those based on your company preference. Again, the taxability for the items been pre-configured by Intuit, so there's no need to change anything with the taxability. So if you next through that screen, then your payroll item will be set up. So next you'll navigate to the Employee Center. So again, the Employee menu and then Employee Center, where you'll see your list of employees. So find your employees for Colorado that you want to set up for this tax. Select the taxes option from the payroll info tab once you've edited the employee. And then click on the other tab at the top once you've entered the taxes menu. And then you will see that drop-down menu underneath the last tax they have added. And in that drop-down, you'll be able to select the two payroll items you just set up, the paid family medical leave employee portion. So once you pick the tax, you can add the employee portion rate here. And then click OK. Then you're going to do the same task and scroll down until you find the company payroll item, add the company portion rate here, and then click OK. So who is registering, paying, and filing the payroll taxes and forms in QuickBooks Desktop Payroll? If you are using a QuickBooks Enhanced Payroll subscription, you are going to register your company with the Colorado Family site and receive your account number from Colorado. You're going to go into the employees menu when it's time to file in April and select the payroll tax and forms and W-2s menu. You can select the pay liabilities menu to record your payment. You can select the file forms menu to generate the quarterly report. But then you're going to go to the Colorado Family website where you've registered, and you're going to make payment and file your return directly on the Colorado Family site. If you have a QuickBooks Assisted Payroll agreement or subscription, you're going to rely on Intuit. We will register your company. We will obtain your Colorado Family account number from the agency. We will debit your liability amounts with each payroll and then pay and file on your behalf at the end of the quarter. So just like every other tax and assisted. So that concludes our demonstration of the steps in QuickBooks to take. So I think I'll hand it back over to you, Blaze, I think, to maybe close us out.
There you go. I should go now to a Q&A session. So Jessica, do you want to handle any live Q&A?
Sure. We have gotten several questions already through the Q&A, and my team has been answering them as they come in, but we can go through them live as well. We'll start here with, let's see, Joni. Evan, I'm going to hand this one to you. If I have a seasonal H-2A worker or workers from Mexico, are they required to contribute to family? I employ less than 9 workers.
So there's a couple of helpful things to respond to there. One, family makes no distinction in types of employees. So if you're an employee working in Colorado, you're going to be covered, whether you're seasonal, whether you're from Mexico or Antarctica, whether you're temporary or part-time, you're still covered and your wages will be subject to premiums. That said, it's always up to the employer whether or not to deduct from the employee's wages. So the employer will have to remit that employee's share of the premiums. And then the employer will have to decide whether or not to charge the employee for that share or pay it themselves.
Thank you, Evan. And I'm going to go to Connie's question here that Evan, it looks like you started answering. They are a TPA administrator. They have employees with one employee that are not self-employed, but you only show 2 through 9 or 10 plus. Our portal has been updated to say 10 plus or 9 or fewer. I believe that's what you were going to clarify, Evan, but go ahead.
No, yeah, that's what I was going to clarify. So basically, even employers with one employee, they're generally going to be covered under family. There are very rare circumstances. If you look at the definition of employer under the Family Act, it's possible to employ someone so seldomly that you don't rise to the level of an employer. But if you take a look at that, I think you'll see that most employers, even with one employee, will still be considered an employer and will have to participate.
Thanks, Evan. And we're going to move on to self-employed workers now. Karen is asking, how does a self-employed person pay the premium? I'm assuming it means S Corp, no payroll. So what is the monthly gross?
So basically, self-employed people have a unique option available to them when they elect coverage. And as a footnote, there's no reason for them to elect coverage until 2024. They can register in our system and start reporting wages if they want to make, future endeavors easy. But there's no reason for them to start paying premiums in 2023. But when such an individual does elect coverage, they decide at the outset whether or not their benefits are going to be based on and their premiums are going to be calculated on gross income or net earnings. So they select one of those at the outset. They can change their mind on that selection once per coverage period, which is an initial 3-year period and then 1-year coverage periods thereafter. Yeah, I hope that's a helpful response.
Thanks, Evan. And also sort of related, a question about S Corp owners. Melanie is asking for a link where she can find info stating that S Corp owners aren't required to participate. Evan, can you clarify the S Corp structure situation? And
Sure. Yep. Basically, it doesn't matter what your corporate structure is. What matters is whether or not the individuals are employees. And if you're a business with individuals that meet the definition of employee, then you're an employer. And so you are subject to, family obligations, and those individuals are covered too. So broadly, an individual is an employee if they perform services for the benefit of another. You can imagine that's exceptionally broad. Really, the action is in the exception to that broad definition. There is a narrow 2-part exception, and an individual is not an employee if 2 things are true. One, they're primarily free from control in the direction, free from control and direction in the performance of their work. And 2, if they're performing that work as part of their independent trade. And so I know S Corps tend, whether you're a shareholder in an S Corp isn't dispositive of whether or not you're an employee under family. I'm a shareholder in a small handful of companies because I've bought stocks. That doesn't mean that if I went to work for one of those companies, I wouldn't be their employee. You have to look at the level of control that the individual is subject to, and whether that person is legitimately operating their own independent business. And oftentimes when you work for somebody else's own independent business, you're not operating your own independent business. But ultimately, it'll be a case-by-case analysis. And the broad rule is take a look at that definition of employee, because that's ultimately what's going to count.
Thank you, Evan. We have two questions here that I'd like to hand over to our tech team, both about the paid family leave number or account number. Where do you find our PFM number? Do you know how Colorado is going to assign the account number? Corey, could you explain how you get your account number?
Sure can. Your account number will be provided upon successful completion of registration. We will be sending a file and an email. Once you have either bulk registered via file upload, CSV or XML or API, those will be provided to you for your clients on that bulk register. Also, if you do it manually through the portal, you will receive an email that essentially says this is your family account number. Hopefully that answers that.
Thank you, Corey.
Yeah.
Here's a question here from Lisa about remote out-of-state workers that I'll hand over to Evan. For remote out-of-state employees, the employer is required to pay the full 0.9%, but the employee is not eligible.
So to clarify, if an individual works 100% out of Colorado, then they're just not covered in any regard. That nobody has to pay premiums for that individual. No one has to, and that individual is not eligible for benefits. That person still has to be considered in the head count if they work 20 or more weeks, just for determining employer size. But otherwise, there's no obligation with regard to those completely out-of-state workers, and those out-of-state workers aren't eligible for any benefits.
Thanks, Evan. Another question here about self-employed workers from Joanna. As a self-employed individual, am I required to pay this 0.45% for myself? If not, how do I opt out? I have no employees. Joanna, the answer to your question is you don't have to take any action to opt out. If you would like to participate, you can individually opt in, and then you would be required to participate for 3 years. But if you don't want to, you don't have to take any action. Another self-employed question about individuals paying premiums. I think we answered that, but maybe Evan, you can go over the 2 different types of reporting options that self-employed individuals can choose from when it comes.
Sure. Yeah, just again, really briefly, if and when a self-employed person chooses to be covered by the family program and they elect coverage, that's when they decide whether or not they want their premiums and their benefits based on their gross income or their net earnings. And then they just report those figures to the family division on a quarterly basis, just like employers do.
Thanks, Evan. A question here from Laura. What is the My Family Plus employer who will generate an account number for you? My Family Plus employer is the employer services portal that we built, in which you will register on. I'll have Michelle drop in the chat the link to that portal. It's on our website, and I believe there's already a link in the chat, but she'll drop it again. Basically, you'll complete your registration through My Family Plus employer. That's how you will get your account number for the family division. Here's one from Gina. We hire a number of interns who work a maximum of 40 hours bi-monthly or 80 hours monthly. Will they participate in family? Evan, do you want to take that?
Sure. If they satisfy the definition of employee, they do. As I mentioned earlier, family covers all employees working in Colorado, whether they're seasonal, part-time, temporary, visa sponsored workers, etc. So as long as they are an employee and they're working in Colorado, then yes.
Here's another question about counting your employees. Jan is asking, what if we had a number of employees who worked a very short time and have never had more than 9 employees on payroll at one time?
I think that's a really helpful question, because it sort of gets at, are you counting total number of individuals, or are we counting FTEs? And you're counting total individuals. So even if an employer never had more than 9 employees total at any given time, when you conduct that 1-year look back and count how many employees worked during 20 or more weeks, you may very well have.
Uh-oh. I think Evan, you're frozen. We'll come back to that question because we do have a couple that are related to counting employees. Let's see here. Evan, are you back?
You tell me.
You look like you're back.
I never felt like I was gone.
You froze for a little bit there, but I'll ask you another question that's kind of related so we can get the full answer. Kelly's
Okay.
asking, if I start the year with 2 employees and during the year, one of the employee leaves and I don't replace them, what happens?
So again, this head count is only happening once a year, and it happens, well, I guess maybe twice a year if for brand new employers. So it's always going to happen upon registration, and then thereafter it's going to happen during the first quarter of every year. And when you do that head count, you look back over the previous year and you just identify how many individual people were employees for me during 20 or more work weeks. And if that total is 10 or more, then you owe the 0.9% for all of your employees for the rest of the year. If that number is 9 or fewer, then you only owe that 0.45% for all of your employees for the rest of the year. Those mid-year fluctuations don't count. And then the next year, you'll do a new look back and count again how many people worked for me last year during 20 or more work weeks.
Thanks, Evan. Here's a topic we haven't covered yet. I have a church that does not file for Colorado unemployment. Therefore, a pastor has housing allowances. Does wages to paying family taxes include housing allowances?
So this one's a little bit in the weeds. Good on whoever asked that, and recognizing that just because an employer may be exempt from UI doesn't mean that employer isn't exempt, or it doesn't mean that they're also exempt from family. And there are no, clergy or pastoral exceptions under family. So that said, family's definition of wages mirrors Colorado unemployment's definition of wages. And so under that definition, housing allowances generally are included. However, they're excluded if they are deductible from income under Section 119 of the tax code. And then that has a number of provisions. I won't bog our time down here with that, but that's the short answer there.
Thanks, Evan. Here's a good question from Kelly. She says, I have only been withholding the employee portion, which I will no longer be able to do since I will not be paying any wages. Am I required to continue to pay, but with the employer contributions?
I'm not 100% confident I understand the question, but if you're not paying wages, you're not incurring any premium liability. So it sounds like this person was suggesting, I was paying somebody wages, I was deducting, which maybe they're speaking in the future, looking back to 2023, because nobody's liable for premiums now. But in any event, yeah, if you're not paying individuals wages, you're not owing a percentage of those wages as premiums.
And I'm just looking at Kelly's second part of that question for the employee that quit. So if we have misinterpreted your question, Kelly, feel free to type it in again or speak up. But I'll move on to another question. Let's see. I feel like we've covered a lot of these. Here's an anonymous question. I understand the 0.45% employee and 0.45% employer premium if I have 10 or more employees. Thank you. I'm confused about how to pay and how much it will be to have a robust paid and family medical leave program.
So I think what this person is responding to is our description of family benefits as being something that is robust, and that recognizing that family generally covers more than any other private leave benefit that employers may provide. So we're just basically saying that you have to, either have participate with the FAMLI program and therefore avail your employees of that robust benefit that the voters enacted, or you have to have a private plan that offers equally robust benefits and is approved by the FAMLI division.
Thanks, Evan. I'm going to toss a question now over back to Corey on our tech team. Can a third party, example, external accountant overseeing payroll using QuickBooks Payroll, set up the family account, or does it need to be done by a company officer? There are a few options here. So I'm going to let Corey go over those. She's basically asking, can a TPA set up the family account, or does it need to be done by a company administrator?
So to answer that question, you can register as a TPA, you can register your client. The client can also register on behalf of themselves and link you. At this moment, we do not have a self-service feature where if the employer registers prior to the TPA registering, they would need to be linked via contacting our contact center. Our suggestion as of right now is that you, the TPA, registers on behalf of your client in order to ensure that that link is correct. Does that answer that question?
Yes.
Great.
Naeem, feel free to jump in if you want to.
No, yes, no, I basically, so that is the guidance where if the employer registers themselves before the TPA is there, or even if the TPA is there, has created its own account, if the employer pre-registers, then the next thing that needs to be done is to establish the link between the TPA and the employer. So the way to do that would be to basically notify your TPA, in this case Intuit, that that you've created the account, and what the TPA can do at that time is upload a file and establish a link, so that the system knows that this TPA will represent your company. So once you're done registering, just let your TPA know about that. Thanks.
Thank you, Naeem and Corey. I have a question here that I'm going to send over to Evan from Karen. Could you elaborate more about the ability of an employee to draw on both family benefits and benefits provided by short or long-term disability plans?
Sure. So basically, the FAMLI Act itself provides that if an employee takes family leave for a reason that would also qualify under the employer's short or long-term disability policy, then the employer is allowed to basically deduct from what's available under that policy what the employee received under family, both the wage replacement amount and the absence duration. The only caveat there is that for an employer to do that, they have to provide a written notice to their employees that that's how they intend to do things. But basically, if it counts under family, you can deduct it from, and it counts under short or long-term disability, you can deduct family usage from what's otherwise available under STD or LTD, as long as there's a written notice first.
Thank you, Evan. Here's a question from an anonymous attendee that we haven't covered yet. If you qualify as a small business with 9 or less employees, can you split the 0.45 between the employees and the employer?
Great question. The answer is no. Well, yes, actually, the answer is yes. That's a really weird question. But yes, the most you can require any employee to pay is 0.45%. An employer is allowed to cover part or all of that. So yes, the employer could split that and therefore only require the employee to pay 0.225. I hope I
Thank
did
you, Evan.
accurate math on the fly.
Here's another related question from Charity. I have 9 employees on payroll, so I am not required to pay the employer portion. Is the employee required to opt into this program, or can they choose not to participate?
Oh, they're automatically covered. So employees of covered employers don't have the option. There's no opting in or opting out. The only employees for which there's any possible opting in or opting out are employees of local governments who have voted to opt out of the program. Those employees can individually opt in, just like self-employed people.
Thanks, Evan. Here's a question from Barb. Can employers register with CDLE now, or do we have to wait until January? Great question, Barb. You certainly can register now. You don't have to wait until January. You can register at any point before those first premium payments are due at the end of the first quarter next year. And I just am noticing that we are at time, so I'm going to wrap things up and hand it back over to Blaze on the Intuit side of things. I know we didn't get to all of your questions, but you guys had some great feedback, great questions for us, and thank you for letting us join you today. Blaze?
It's absolutely our pleasure. So as noted, the information provided today will be available to you in the QuickBooks Payroll Compliance blog post. I'll throw that link in the chat one more time for everyone to go ahead and bookmark. And so all the information provided there. Again, thank you so very much for coming today. I hope you found the session both informative and helpful to you and your business. Please fill out the survey and let us know if you actually did enjoy today's session and if it helped you know that we have your payroll, that we have your backs, and possibly even instill those trust in the QuickBooks brand. Thank you so much and have a great day.